Okay, well, we are happy that you're able to spend your coffee break with SB Sarah. Thank you for those who signed in early. Hopefully everyone is still able to hear. My name is Adam Sands. I'm one of the communications officers here at SB Sarah, and joined today by our service credit purchase guru, Sheila Greer. Sheila, can you say hi?
Hello, everyone.
Hi, Sheila. Hopefully everyone is able to hear you. So again, thank you so much for joining us, spending your coffee break with us as we talk today about service credit purchases. Some of you may already have familiarity with this topic. Perhaps you looked into purchasing service in the past, and others of you are not quite sure. Maybe you heard one of your coworkers talk about service credit purchases or buying time. So wherever you're at as far as background knowledge, we hope to keep this an informative overview. We'll keep it quick. I know that many of you have to get back to work and you only have 15 minutes. And for those of you who do have extra time, we'll be glad to stick around longer and answer your questions at the end. So is time on your side? So let's define service credit. Service credit is earned based on the hours that you work for an SB Sarah covered employer. And it's actually one of the factors used to calculate your lifetime monthly benefit amount. So your benefit amount in retirement is partially determined by the service credit that you've earned. And in fact, each hour that you work within a standard pay period is increasing that future retirement benefit amount. And so under certain types of situations, and we'll talk about those situations as we go through the slides, but under certain situations you may be eligible to purchase additional service credit. So you might actually be able to buy time to enhance your future benefit amount and or bring you closer to vesting, that 5-year vesting milestone, or bring you closer to retirement eligibility. So we'll talk about eligible types of purchases in just a bit. But it's important to give a disclaimer, which is if you are eligible to buy service credit, actually doing so may or may not be in your best interest. Ultimately, it's up to you to really crunch the numbers, see what works best for your particular situation, as there's no right or wrong that applies to everyone. Really depends on the specific details of your situation. So let's talk about eligible types of service credit purchases. So these are the types of purchases that you might be able to make to, again, enhance that future benefit amount and possibly bring you closer to vesting or retirement eligibility. And the first type of service credit purchase is a redeposit of withdrawn contributions. So this would be time that where you previously worked for an SB Sarah covered employer. And when you left that position, you cashed out those contributions. Now coming back to work for an SB Sarah covered employer, you have an opportunity to redeposit those withdrawn contributions. Now, Sheila, I understand there are some specific rules around the redeposit. Can you speak to that a little bit?
Well, the important thing to know about redeposit service purchases is that if you refunded 4 years of service, you would not be allowed to purchase 2 out of the 4 years. You would have to purchase all or none of the service. And if you had multiple periods of service, you would also need to purchase all periods of service or none. Another thing to know about redeposits is that if your refunded service falls before January 1st, 2013 is considered General Tier 1 service. And if you purchased it, it would, in your General Tier 2, it would automatically make you General Tier 1. And there's some things that would happen.
I see what you're saying. So so if the previous time that was cashed out was done as a Tier 1 member, by redepositing that time, you automatically go back to Tier 1 status. So that basically means that, yes, you would be a Tier 1 member, and that would mean maybe more generous compensation rates in retirement. Your benefit percentage would be higher as a Tier 1 versus a Tier 2. But at the same time, you would also almost certainly have a higher contribution rate switching over to that Tier 1 status. So just something to consider if you're weighing whether or not to redeposit that past time. And then as Sheila said, it's an all or nothing purchase. So whatever you cashed out, it would have to be a full redeposit. It couldn't just be a partial amount. And Sheila, there's interest that accrues as well. Is that correct?
Yes, you will need to put back what you withdrew plus the interest those contributions would have been gaining had they been here at that time to present.
So maybe beneficial for a member to at least inquire or look into this perhaps sooner rather than later from a cost standpoint, as the interest is accruing and the cost would increase as that interest accrues.
Yes.
There's also a service credit purchase for past ineligible service. So this would be time that you worked for an SB Sarah covered employer, maybe as a part-time employee, as a contract employee, time that you worked that you were not paying in contributions to SB Sarah. Also a purchase for authorized leave. This would be time for authorized leave for medical injury or illness, or if you're in the military reserves and you're called up to active duty in the course of your SB Sarah covered employment. This would be time that you are on leave and not paying contributions to SB Sarah. As you can see under the rules column, you can buy up to 12 consecutive months per sick leave. There's no limitation for service credit purchased as military leave. And finally, and I know we get a lot of questions on this particular type of service credit purchase, but prior public agency service. So this would be time from your past that you worked maybe for the state of California, the federal government, some California cities or counties, the military. And Sheila, I understand that essentially you would have to have the contributions from that previous public retirement system cashed out in order to be able to buy it back with SB Sarah, with the exception of military time. Is that correct?
Yes. In order to be eligible to purchase the service, the prior agency needs to verify the amount of service and that you are not going to be entitled to receive a pension from them, except when it comes to prior military service prior to membership. You could be receiving a retirement benefit from that and still be allowed to purchase it.
And this one, it doesn't switch you back to Tier 1 status, right? It's really just the redeposit of withdrawn contributions is the only type that could allow you to regain Tier 1 status.
Yes. And this service tends to cost more because it's not service that was made with an SB Sarah covered employer, so it's calculated at a higher rate.
And you can see the different payment options listed at the bottom of this slide. There is a after-tax payment plan. So Sheila, this is basically paid off through payroll deductions. Is that correct?
Yeah. So for prior public agency service, you would have up to 5 years worth of payments. For all the other types of service purchases, you would only have as much time to make a payment as you have to purchase. For example, if you have 2 years worth of service to purchase, you get 2 years worth of payments. For all the other types of service, prior public agency service is a maximum of 5 years.
We have an excellent question here in the chat box. The question is, can you do both a redeposit and a past ineligible service purchase? If a person would be eligible to buy back both of those different types of past service?
Yes.
Okay. If eligible, answer is yes. Kelly, thanks for your question. And as we go through the end of the slides, we'll talk about the purchase process and what you would need to do to get started on that. So Sheila just talked about after-tax payment plans where you're paying off the purchase through payroll deductions. There's also an option to pay it off with an after-tax lump sum payment, kind of a hybrid where you could do a partial after-tax lump sum and then an after-tax payment plan. And then finally, a rollover from a deferred compensation plan. Can you speak about this a little bit?
Generally, these rollover funds will come over with no tax penalties. The important thing to know is that you must have the total cost of the contract amount in your deferred comp account in order to roll that over.
And this has to be with an employer provided or qualified
Yes,
plan?
it has to be from your employer's qualified plan. And if you don't have the total amount of the contract in your account balance, you can contact our office and we can give you some additional information regarding that. So it's not, you could still do it in some cases.
So let's talk about estimating your future retirement benefits. So this is a smaller snapshot of the full compensation chart for Tier 1 general members, but I just wanted to illustrate how a service credit purchase could, just as an example, increase that future benefit amount. The way to read the chart is going across the top horizontally would be your age at retirement, and then going down the left-hand side would be your years of service credit at the point of retirement. So you can kind of see, starting at the top, someone who is 55 years old with 15 years of service credit as a Tier 1 general member would, if they retired at that point, would receive 30% of their final average compensation as a lifetime monthly benefit. And you can kind of follow that blue path and see that as that person continues to age and continues to work prior to retirement, how that benefit percentage goes up. And just as an example here, you can see in that short green column, if that member was to buy, in this particular example, 3 years of service credit, you can see how that benefit percentage goes up. So although the member is not aging, they are increasing time. They're buying time, and that service credit is a component of the benefit calculation. So you can see that illustrated right there, how that benefit percentage increases. And then in that yellow pathway, you can see that if that person continues to work and age after buying the service credit, right, you can see that they're somewhat on a new trajectory towards retirement. You can kind of follow that yellow brick road and see how that percentage goes up. So, and let's lastly talk about the purchase process, and we'll leave this up on screen for everyone to read. Let this marinate. But Sheila, can you maybe add some notes or words of wisdom with regards to the process?
Well, a quick explanation of the process is first we receive the request from you via email, phone call, or electronically. Then we provide you with the forms needed to verify the service. Once the forms are received in our office, they are reviewed for eligibility. If the service is eligible, we prepare a service purchase contract that is mailed to you along with instructions. And the thing to know is this process can take up to 60 days, and in some cases a little longer.
Good to know. Well, with that, I want to thank you all for joining us and spending your coffee break with us here at SB Sarah. Thanks to Sheila and thanks for Laura. They're the real subject matter experts, so we appreciate them lending their wisdom and their expertise. We're going to stick around on this webinar. I know some of you probably have to get back to work, but for those of you who have additional questions, we will gladly hang out. Please feel free to submit your questions in that chat box.